So, Muriel, today the Dow is up several hundred points, and this is after taking a serious tumble yesterday following the lower than expected sales coming from Apple, particularly in the China market. What can you tell us about this roller coaster ride?
Well, Happy New Year, Ebony.
Happy New Year.
It is part of the whole volatility, and we'll talk about that more later about the market. But Apple yesterday made a pretty major announcement at missing their forecast. This is the first forecast they've missed in 15 years, and they missed it by over 8%. So this is a big shock to the market when a company that was worth $1 trillion just a couple of months ago has already lost 30% of its value. So $300 billion from October to yesterday's decline. That's a major issue. And the driver for all of this is the fact that in the Chinese market, the market has slowed considerably. There's a lot of price competition. Apple had a 12 share in 2015. Today they have an 8 share. The market's grown, but they haven't kept pace because local competitors like Huawei are really offering a much less expensive phone. And that also is filtering into the United States. You know, the average price of an Apple iPhone X is over $1,000. The XR is $749. That's the price of a computer.
Right.
And if people are replacing their computers every couple of years, they're taking pause to think it over again.
And speaking of Apple, let's take a listen to CEO Tim Cook's explanation about the lower than expected sales.
As we look at what's going on in China, it's clear that the economy began to slow there for the second half. And what I believe to be the case is the trade tensions between the United States and China put additional pressure on their economy. And so we saw as the quarter went on things like traffic in our retail stores, traffic in our channel partner stores, the reports of the smartphone industry contracting, particularly bad in November. And I haven't seen the December number yet, but I would guess that would not be good either.
So we heard there the numbers are not expected to be good. Will this possibly impact the recent news that Apple plans to expand in a number of cities, including right here in San Diego?
Well, I think the expansion in San Diego is for high-end jobs, developers, engineers. That's not going to change. I think the bigger issue for Apple is going to be the price of these phones. They're now an iPhone company. What the report didn't show is that every other division of Apple did extraordinarily well. But when you're so dependent on these iPhone sales, if people aren't coming into the stores or you need bigger incentives, that's something that Apple's going to have to plan for in 2019.
So moving on to another U.S.-based company that's experiencing a drop in stocks, Tesla. It seems that investors are possibly responding to the federal tax break, which will be phased out. Is there any sign that maybe the popularity of this car is dying out?
I would say that, you know, Teslas are going to be as popular as ever. The issue is Tesla actually had a $2,000 price increase across its entire line, anticipating the federal tax credit that you mentioned going from $7,500 that people can take off directly from their taxes to half this year, $3,750, and it's phased out at the end of the year. Tesla's really working hard to try to keep the price accessible. You know, one thing that could talk about their popularity is that over 400,000 people, when the Model 3 was announced, put a non-refundable $1,000 deposit waiting in line for that production to come out and allow them to buy that car. And that's the bigger issue for Tesla. It's not the popularity of the car, but their ability to produce the cars that are in demand.
Moving on, lastly, we are entering the second week of the partial government shutdown. From a financial perspective, who's impacted?
Well, you know, 800,000 federal employees are impacted. Half of them are at home without a paycheck. The others are working with a paycheck, or without a paycheck, but they have to work. Department of Homeland Security, for example. If there is not an agreement today, 9 of 15 federal departments are shutting down at the end of the day, which is a major issue. And economists project that for every 2 weeks that the government is shut down, we lose 1/10 of a point of GDP growth. So if we were projecting 3% growth for 2019, that would be 2.9% as of today. And if the shutdown goes on 2 more weeks, it's going to be 2.8%. So it's very important that while it doesn't have humongous impact, it's big impact.
We'll stop right there. Muriel Kopik, thank you so much for helping us make sense of it. Until next time.
Thank you, Ebony.